How's everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. This is the second half of what I'm calling kind of SBA weekend here. Hopefully, everybody got a chance to catch yesterday's episode, which was an interview with SBA lender Paul Avery. We went through the various SBA programs and we spent a little bit of time talking about the 7A program, kind of the ins and outs. How long does it take to do an SBA 7A loan? What's the documentation required? What's the closing process? What kind of approvals are needed by the bank in terms of what does the bank need to approve? What does the SBA need to approve? So we kind of walk through all those different items and everything in the interview. So please check that out if you had a chance. What I'm looking to do with today's video is try to give everybody a rundown just on like what's going on with the SBA right now. They're offering a new what they call working capital pilot program, which is basically a line of credit that goes up to about $5 million. They've got some other things going on with different avenues. And so we're going to talk about that stuff. And then we're going to wrap up talking about kind of the plight of the SBA borrowers who got EIDL loans and kind of how they're really struggling with their debt loads and really having kind of a hard time of going at it. So with that said, we're going to bring in a couple different articles here. So this is the new. So SBA announced, this was from August 1st, that the SBA's their new working capital pilot program basically launched today. So what is this? The SBA is offering its 7A working capital pilot program for lenders and borrowers alike that make the government-backed lines of credit available for up to $5 million. So according to the SBA, in addition to an annual fee, maximum interest rates for the capital lines it offers are based on the prime rate plus 3% to 6.5%, which translates to between 12% and 15%. Under the program, credit lines below $150K have an 85% guarantee, while those at $150K and above have a 75% guarantee. The new program, which will run through July 31st, 2027, is an effort by the SBA to simplify the availability of capital lines for smaller businesses pursuing expansion or new contracts. Through the SBA's current 7A loan program, which provides lenders with guarantees in an effort to bolster loan activity for small businesses, the organization issued 57,000 loans in 2023 worth a combined $27.5 billion, the majority of which for less than $350,000. Meanwhile, the SBA's Express Loan program for credit lines up to $500,000 has been struggling, largely because of the fact that it only has a 50% guarantee, according to the agency. I think it's also because of the high interest rate. I mean, that, the interest rate offered here, a variable rate of basically anywhere between 12 and 15%. That's a pretty steep, that's a pretty steep rate for a line of credit, So, I mean, while yes, the 50% guarantee on the Express loan certainly impacts it, I think the interest rate is a bigger issue. And then this goes on to talk about basically like the impact on small business lenders. And then we're both skip ahead here. I got a number of articles to go through, so I got to kind of run through this a little bit quickly. So here's another article. SBA announces start date, additional details on new working capital loan program. And just, again, SBA's Small Business Administration has dropped new details about its planned structured line of credit program, including its fast approaching start date. Let's see here, newly available details. The program can provide a business with up to $5 million in guaranteed line of credit. Lenders making loans of $150,000 or less through the program will have 85% guarantee. Talked about that. Lenders may authorize a loan term of up to 60 months or 5 years. The lender's annual service fees paid to the SBA for lines of credit through September 30th are 0% for loans of $1 million or less and 0.55% of the guaranteed portion of the outstanding balance of the loan for loans above $1 million and up to $5 million. For loans as of October 1st, the annual service fee will be 0% for loans of $500,000 and less and 0.17% of the guaranteed portion of the outstanding balance of the loan for loans between $500,001 and $1 million and 0.55% for loans $1 million over $1 million. And then lenders may not pass the annual service fee on to the borrower. So these are service fees that are paid by the lender. It's very, very important to understand. It says here the SBA under the Biden administration has been enhancing its loan programs and tweaking its small business services as part of a wider effort to expand lending to the smallest and most underserved businesses. That includes a recent announcement that the agency is expanding its lending efforts to boost energy efficiency and climate-focused projects. So there you have it. So they've rolled out this new working capital program. But then let's take a look at something else here. So SBA update for August 2024, new loan beefed up small business programs. So, so small business owners are now officially able to apply for the Small Business Administration's new working capital loan. The announcement comes after the agency initially rolled out the working capital pilot program offering for its 7A lenders, releasing details on fees, rates, and terms. So we give small business owners more flexibility. Owners can go to the SBA website for more information or use the agency's lender match tool to find a lender near them. But that's not the only move the agency has made over the last month for business owners and lenders. So SBA increases maximum loan for greener lender initiatives. So the SBA's new Green Lender Initiative for energy efficiency and renewable energy projects is within the Community Advantage program, the mission-driven component of the SBA's Prime 7A loan program. The agency is increasing the maximum loan size available for energy-related and climate-related projects to $500,000, up from a current $350,000 cap that also requires projects to be specific geographic areas. The agency will be creating an application process for participating lenders to expand their geographic reach. It will also allow lenders to apply to expand their loan sizes up to $1 million or $2 million for climate-related projects. SBA released its lender fees for the fiscal year of 2025. SBA faces EIDL collateral program challenges. We're going to talk about that in a minute. But it just says here, the agency is facing down hundreds of thousands of small business owners who are defaulting on their COVID-19 economic injury disaster loans, but it lacks the infrastructure that banks have to access and sell off the collateral pledged by small business owners. Instead, it's asking the business owners and even other creditors to help the agency liquidate surplus equipment or value. SBA offers up cybersecurity prize. So organizations have until August 15th to submit an application to the cyber prize competition. Obviously, that's passed. The SBA has also made a number of recent moves in recent days, announcing 28 awards for its 2024 program for investment in micro entrepreneurs, releasing new business reliance guide, and launching a new streamlined contracting certifications experience called My SBA Certifications. So interesting stuff. Let's see here. Okay, SBA reopens flagship loan program, seeks more lenders for second time in 2 years. So the Small Business Administration for the second time in just over a year is letting non-traditional lenders apply for one of its small business lending company licenses. So lenders interested in the SBA offerings can apply to become what's called an SBLC. Which can make loans of up to $5 million across the country through the agency's principal 7A lending program. The SBA also is taking applications from lenders seeking to become nonprofit community advantage SBLCs, which can lend up to $350,000, but only in specific geographic areas. The move comes after the SBA in July said it was expanding its community advantage SBLC loan maximum to $500,000 for active lenders. It was also launching an application process for lenders to go up to $1 million for those loans or $2 million for projects related to climate change. The SBA will accept applications for new SBLCs through October 15th. The agency plans to award up to 3 additional licensees. Applications for CA SBLCs can be accepted through December 20th, with the SBA saying it would award an indefinite number of such licenses. See here. And then it just goes into kind of rolled out the working capital program. All right. And now, okay, so that's kind of what's going on. So the two big things. So just so everybody knows on that, just to add a little bit more context there. So The SBA for I think it was the first time in like 40 years, they were trying to expand their reach, though. So they enabled some non-traditional lenders, in other words, non-bank lenders, to basically get a license from the SBA, and so thus enabling them to be able to lend money and 7(a) loans, express loans, 504 loans, so on and so forth. Um, yeah, I'm hesitant as to whether or not that this is a really good idea. I mean, I understand the concept. They're trying to, increase the reach of the SBA, so that more people from underserved demographics and markets and stuff can get in and get access to capital through these SBA loans. I get all that. But the SBA it's a very, very specialized program. And the reason why it has been kept to banks for 40 years is because banks are really good at doing these loans. It's not to pick on anybody. It's not to, just exclude anybody from the process. It's just that, like I said, these loans they're very paper intensive. They're very time challenging. And how do I want to say this? Like the SBA is not always the easiest partner to work with. They make a lot of changes year in and year out for, I want to say, the last 6 or 7 years. It's just like nonstop changes and what they call the SOP, the standard operating procedure. The SOP has gone from like yay thick to like yay thick. If I can get that in there, like yay thick to yay thick. So it's not SBA lending is, I'll put it this way, SBA lending is not for the faint of heart. I'll put it that way. So, okay. So now let's get into, like I said, so they're trying to expand the program, bring in additional lenders. We've got this new working capital line that they've put out. Now let's talk a little bit about the EIDL loans for a second. So SBA basically faces, let's see here. Yeah, SBA basically faces $1 billion EIDL collateral program. Now, I did report on this in a previous episode called What's Going On with EIDL Loans. So I kind of covered this a little bit here. I just wanted to get everybody a little bit more of an update. So this was the most recent article that came in. Small businesses that got previous COVID-19 relief loans find themselves in a precarious financial condition. So what it goes into is basically they looked at a recent survey that was done by and I'm going to kind of flip back and forth here for a second. So here is the Federal Reserve Bank of, I believe, of Cleveland that did this. Basically, they did a survey, basically a small business credit survey. It basically says here, it says basically a 5-page report that says from short-term relief to long-term hardship, some small businesses struggle with debt burdens from COVID-19 economic injury, disaster loans. And then I'll kind of get into this in a second, but let's go back to the article for a minute. So it basically says that analysis comes from a new report from the Federal Reserve Bank of Cleveland, which found that business owners with COVID EIDL loans are experiencing a vicious cycle of high debt and poor performance. The conclusions mirror challenges previously highlighted by the playbook, with many small business owners finding themselves trapped under debt taken on during the pandemic. The Fed report notes that 44%, if I could scroll down here a little bit, 44% of small business owners with employees that responded to the Federal Reserve's 2023 Small Business Credit Survey said they had taken on an EIDL loan at some point. Of those owners, 64% said they had outstanding debt from that loan, compared to 36% who received the loan and had paid off its balance. The survey went on to report that small business owners that received an EIDL loan were far more likely to have more than $100,000 in total debt, as 67% of respondents who had outstanding debt from an EIDL loan said they were facing $100,000 or more in total outstanding debt, compared to 28% of respondents who never took an EIDL loan. 52% of business owners with outstanding EIDL loan debt reported having challenges making regular payments on their debt in 2023, far more than the 29% who never took the loans to begin with. 62% of business owners that had outstanding debt from an EIDL loan reported operating at a break-even or loss point at the end of 2022, compared to 51% of businesses that did not receive an EIDL loan. Businesses with EIDL debt that applied for new loans were less likely than those that had never received an EIDL loan to be approved for the amount they requested, if they were approved at all. So to be clear, the report notes it's impossible to know how these businesses would have done without a loan through the EIDL. Many firms that stayed in business through the end of the pandemic with outstanding COVID-19 EIDL loans have elevated amounts of outstanding debt, are in a more precarious financial condition than those without outstanding EIDL loans. The SBA approved more than 4.1 million EIDL loans across 2020, 2021, and 2022, according to numbers compiled by the agency. To the extent that recipient businesses now are having financial challenges, bankruptcies are on the rise among companies that tapped into the EIDL loan program, with the SBA finding itself among the top creditors for those small businesses. It's also becoming increasingly clear the agency does not have the resources to take and dispose of the collateral it requested for those loans. And before I get into the end part here, which is basically many EIDL loans are being charged off, I just want to state that banks did not make these loans. The EIDL loans were made directly from the SBA to borrowers. Banks had nothing to do with them. And now that, there's all these problems here, again, this is why the SBA is not a direct lender. The banks are always the direct lenders. So the bank underwrites the loan, the bank determines the risk, the bank determines, do we want to do this or not? And then it basically sends that loan over to the SBA for like clarification, to basically say like, yeah, did you follow our underwriting procedures? Are the terms and conditions satisfactory? Does everything look okay? The SBA basically checks and kind of checks off on it and says, yeah, that looks fine. If it's a real estate purchase, you get an appraisal, you get what's called an environmental phase 1 report done. And as long as both those reports come back clean, you send them over to the SBA. The SBA basically reviews them real quick, signs off on them, says, yeah, we approve it, it's good. And then you go to closing. But again, here that didn't happen. The SBA basically just shoved this money out to borrowers. I don't really know exactly what all their underwriting procedures were, or how they were evaluating the risk, or deeming people whether they were or were not worthy to receive the loans. I think in a lot of times, just like with the PPP loans, it was just like, hey man, we have the funds, you can get the loan. We're just gonna shove it out to you at very favorable terms too. I mean, this was like a 30-year loan with like 2% or 3% interest rate, something like that. So very, very favorable terms on these loans. But let's just check this real quick here. So at first, business owners only had to begin repaying EIDL loans after 30 months, not days, months. The agency then instituted several rounds of hardship deferments that capped payments. In early 2024, it announced a 60-day goodwill exception period for some loans, during which the agency would not send delinquent loans to the IRS or Treasury Department for collections, although it did not defer the interest collecting on those loans. The SBA has drawn heat from lawmakers for saying that it would not collect on Paycheck Protection Program loans of less than $100,000, and lawmakers have been concerned the agency would also not collect on smaller EIDL program loans. The agency said its PPP collection efforts yielded very little, and ultimately it cost more to try and collect than to write off the loans. The SBA Inspector General also has pointed out in reports to Congress that up to 17% of all COVID EIDL and PPP funding is potentially fraudulent. 17%. Specifically, more than $136 billion in EIDL money and $64 billion in PPP loans, representing more than 4 million total loans. The SBA has disputed the watchdog's methodology and conclusions. Meanwhile, many of the SBA's EIDL loans are being charged off and sent to the Treasury Department for collections. So in 2021, the agency charged off $21.5 million in EIDL loans. In 2022, that grew to $198.2 million. Last year, the agency charged off an eye-popping $52 billion in EIDL loans. $52 billion, about 17% of its portfolio. That number is likely to continue to climb. The SBA Inspector General estimated the amount of delinquent or past loan dues, 100,000 or less, to be about 62 billion as of March 2023. The SBA has since said about 1.3 million EIDL loans are either past due, delinquent, in liquidation, or charged off. So what does this really mean here for borrowers? What this really means is that if you borrowed one of these loans and now you go into a bank and you're trying to borrow more debt, you're probably going to face higher scrutiny. I mean, the banks are probably going to look at this and say, you know what? A certain percentage of these borrowers that took on these EIDL loans, the average loan size was 100,000 or above, and it's now added a significant debt burden on these small businesses, and can they really repay? So, and then just taking a quick look here again at this 5-page report, just some comments here. While we were relieved to be approved for and receiving funds from the SBA, it will take me until I am 90 years old to repay, and the repayment will be a challenge, but there was no other choice if we were to stay in business. And then it kind of goes into like the loan terms, like 30 years, 3.75% for for-profit businesses, 2.75% for private nonprofit organization, $500,000 for loans approved before October 8th, 2021. Required for loans greater than collateral was required for loans greater than 25,000. Although I think the collateral was really just like a UCC lien against the business assets. It wasn't any hard collateral. It wasn't real estate. I don't even know if people had to personally guarantee these things. And then we basically run down, it goes through some demographics, and then conclusion. So we are struggling to stay open due to losses from COVID-19. I fear going out of business with my EIDL loan hanging over my head. I took the loan under great stress from the pandemic. Sometimes I'm grateful that I was given a chance to save my business, but I also feel I should never have been approved for the loan. Every day is a struggle, and that's from a manufacturing business in California. So, it's really difficult. And I just want to say that I do have links to these articles, to this report. There will be links down here in the description if you want to go look these up and review them yourself. But I do feel for the plight of these borrowers. I really do. I mean, they had to make a really difficult decision. They took out debt that they didn't want to take out, but they felt like they had to in order to keep their business open, to keep their business going. So I get it. I get what they're, how really, really challenging this is for them in this current environment. And I hope a lot of these borrowers can find a way to kind of figure this out or make it work, or hopefully the next couple of years things get better. Maybe they vote for somebody in November, might help the economy a little bit. I'll leave it at that. But look, overall, I just want to say this. While the SBA has done some things that I have not necessarily been crazy about over the years, you cannot dispute the track record. The SBA has been a phenomenal program for small businesses out there in the market. I would highly encourage anybody, if you have a small to medium-sized business and you need capital, and maybe if you can't qualify under conventional terms, there's a reason why there's these SBA programs. It enables banks to make loans to small businesses when they otherwise wouldn't be able to. So I highly recommend you explore. The SBA has a number of programs, whether it be 7A, 504, Express, Micro, Cap Lines. They have a plethora of programs. And go check them out. Go do some research. Go talk to your bankers. Go talk to the SBA. See what you can find out. And like I said, I think you'd be pleasantly surprised that there are some programs that you would absolutely qualify for, and can help you get the capital you need to grow your business. So, the SBA has been it's been a great government organization for a long, long time, and I just hope that it continues to stay that way and continues to be a great place that really is able to help a lot of people out there. So, and like I said, if you didn't catch the interview that I did with Paul Avery yesterday, please go check that out, because these two episodes kind of go back to back, go hand in hand. And so that's kind of SBA weekend. So I'll just wrap up by saying, if anybody didn't catch the strategy room on Friday night, please, that recording is up. Please go check that out if you have a chance. And I will have new episodes being posted throughout the week this week on Monday, Tuesday, Wednesday, and Thursday. So just check those episodes out as they come in. And there will be another strategy room coming up this coming Friday night, as we're, like I said, as we're doing every Friday night at 7 p.m. So check that out. So please make sure, so if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please remember, we are on YouTube, Rumble, and all major podcast platforms. Please make sure to leave your comments down below, as I always love getting back to everybody, and I will see everybody again real soon. Thanks a lot.